Bill Baruch, he joins us now with his latest trades. Bill, you got a bunch of them. Eli Lilly, McDonald's, also seeing more Palantir. Why don't we start with Lilly, if you don't mind?
Yeah, we are underweight, have been underweight healthcare in general, about 5% between AbbVie and Amgen. We wanted to add a best-in-breed name. What got us excited was last Friday had the news that the GLP drug in pill form is testing better than expected. The stock jumped really well, and we waited till Monday. It settled in a little bit, and that's when we added it as a new position to portfolios. It's closing the week out right now, back above the 200-day moving average. So we're excited to get a little more healthcare exposure, but it's all drug manufacturers that we're leaning into here.
All right, speaking of it, so you're a lot of confidence when it comes to GLP-1s, and then you bought some McDonald's, a stock that could be impacted by GLP-1s. What gave you the confidence to buy some McDonald's in this current environment? By the way, Staples having a terrible week. I know McDonald's isn't a staple, but similar. I mean, people kind of go to McDonald's, you have your kids, you want something quick to eat.
Yeah, it's a little bit of a fair trade, but the thing is here is you referred to it as a staple, and we're looking at this as a defensive name with multiple in the mid-20s. You know, a lot of these traditional defensives are mid-20 multiples now. The thing about McDonald's is the relative strength against other names and how it's levitated. We really like that. But the franchise model in this environment, I think that will really keep margins, keep them firm. And I think it's a little bit recession-proof, as they continue to develop the menu, but it's also a lower cost, a price point to continue to bring people in the door. So we really like McDonald's. Love to see if this thing can get above $320 and really break out.
Kevin, you also on McDonald's earnings before the bell on Thursday, by the way. Your view on the company, the outlook as we go forward. Obviously, we're worried about recession, things like that, economic slowdown.
We actually added to this stock as well, Frank, really for the reasons being that if we do go through a recession, which is a real possibility, I don't think anybody's going to argue that there's a coin toss there. The consumer trading down to McDonald's is a beneficiary. They've navigated really well the rise in inflation that was massive. And I think at this point, you can really look at this stock longer term and feel that there's a solid investment thesis here, plus a dividend grower that we really like.
Shares of the Golden Arch is obviously up about 0.25%, about 9% year to date. So, Bill, going to come to your other buy. You bought some more Palantir. Now, earlier we were just talking about IBM being a beneficiary of training people to use AI. This is a company that just does it themselves. And I've talked to a lot of people. I used to cover it, but a lot of people that just say that their offerings are very unique, and they also do a great job with their boot camps. Why right now, though? Stock certainly well off of its highs.
Yeah, we initiated as a new position a few months back when it around $85, $88, and it really held extremely well technically when the whole market fell out over the past few weeks, and it's levitated. I mean, this is again a name where the relative strength to its counterparts is telling us, price is telling us something here. But at the end of the day, some of these big defense names, where they were trading pretty poorly this week, and the budgets are getting slashed. But I think what you're going to see is continue to lean in the AI-driven defense spending, and I think Palantir is going to be a big beneficiary, continue to be a big beneficiary, not only in that narrative, but with the administration at the forefront right now.
All right, Bill Baruch, 3 big buys: Eli Lilly, McDonald's, and Palantir. Bill, great to see you as always. Thank you very much. Joe, going to come over to you on Palantir. Shares up almost 2% right now, up about 1 3/4 of 1%. Your take on the buy, your take on the company overall in this environment?
This company has had a remarkable rebound from the April 17th low at 66.12. Look, we added, luckily, nothing more than luck, we added Palantir at $16 to the ETF, and we've rode it higher. So here's what happened. Towards the end of the year, you had this narrative where people were saying, okay, this is the purest form of quote-unquote momentum. And then you have another name that is also well-defined as momentum, and that's AppLovin. What has happened subsequent to that, and what we are seeing in the last several weeks, is that Palantir is actually giving you the fundamental reasons why it is appreciating the way that it has. It is not just about government spending. It is about the commercial division for Palantir, which is contributing significant revenue growth as it relates to AI. It's NATO using the Maven Smart system. So that's where Palantir has differentiated itself as, no, it's not just a momentum name. It is a momentum name that actually has some qualitative characteristics and strong fundamentals behind it. And just pull up a chart of AppLovin, and you can see the difference where AppLovin's kind of wallowing at the bottom after a dramatic sell-off. Yeah. That's a momentum name.
To your point, even if U.S. government spending on defense pulls back, we know Germany's upping its spending, Spain's upping its spending. This is a company that works with a number of different nations around the world when it comes to defense, and now, as you said, growing that commercial business.
And CEO Alex Karp is doing a really good job looking and saying over the last several years, we need to pivot away from relying solely on the government. Let's move more to commercial. And they're actually expediting it and doing it very quickly. So the all-time high at 125.41, I think that's February 19th. That looks like it's in jeopardy. I think they report earnings on May 5th, Monday, May 5th, somewhere around there. We'll hear more.
Yes, to your point, shares about 12% off their 52-week high, but right now up just about 2%.